Back, well, on to a CNBC TV 18 exclusive then. Let's get you highlights from the special presentation by CNBC TV 18 and the Reliance Mutual Fund Mission Prosperity. This is our initiative to increase investor awareness about mutual funds, and we saw some of the best voices from Dalal Street Talk Investment share their ideas for becoming a better investor and a lot more. Have a look.
In 2003, India didn't have telephones. I mean, we had about 40-50 million fixed lines in a country of billion people, and we had 50 million phones, and it was almost impossible to get the phones, and even for the government to provide despite all the intentions. And here comes without wireless, and you could execute like every quarter they were growing by 100%. The demand was so massive, and yet the stock was available at Bharti stock was available for 5,000 crores at 25 bucks. And that was the only company listed, and incidentally that was the best and the largest. We could figure out when in February 2003, when Mr. Mittal announced that they have broken even, we could figure out in next 5 years this company is going to make at least 25,000 crores, and the stock was available for 5,000 crores. In next 2 years, the stock went up by 50 times from 25 to 1,200.
What are we talking about in terms of a bull market? Do you see much higher all-time highs now from here on?
Sincerely, it is very difficult to say that markets are headed very high. Like, I mean, it surprises me every point of time whenever we try to figure out where the market is headed. It's much easier to figure out. I mean, that's my personal style. I'm continuously looking for ideas, and I keep trying to look for an idea which is a compounder. So, we have a nice warm market what we have today, and let the market move 12%, 13%, some correction, again moves 15-20%. I think that's much better for the economy, for the investors, for everybody. But the nature of the thing is very different. It will happen, and it will be much bigger. This time, whenever it happens, maybe 6 months, 2 years, 3 years, it will be much bigger.
Madhu, you know, you say, and that's your favorite line these days, investors should ask, कितना लेना है और कितने टाइम के लिए लेना है. From your personal experience, one stock that you thought you should have bought more and should have stayed invested longer. Your personal experience.
दुखती नस पे हाथ रख दिया यार. There are so many of them. So when we bought Siemens, for instance, we were very early. We bought Jindal Steel and Power in 2002-03. These companies were not even heard of. We bought Jindal Steel and Power when the market cap was 300 crores. And at the peak, the market cap went to 70,000 crores. We bought Divi's Lab when the market cap was 140 crores at the beginning of IPO. At the peak, it went to 40,000 crores. I think if you ask me, you ask the mistake to someone, the only regret which I have looking back is I wish I did not discover many new stocks. And I just kept on buying what we discovered in that time. I think we would have made a Guinness Book of World Record if we had stuck to our investments, what we identified very early on. So the thing was that we could not buy enough, or maybe we needed this experience which has come over a period of time. So something going a little bit wrong in the company or in the market, or from time to time markets really underperforming and challenging our conviction. So I'm sure we have learned. And the next 20 years, we will have a much better performance in this regard than we had in the past.
Jake, any personal experience that you can recall?
Well, personal experience in the sense that the stock market was new to us. I mean, we who came from Delhi actually thought that this was the den of vice, as it was. So I saw it firsthand when I was working in Citibank. And so I learned actually by investing my monthly salary, as it were, into whatever little that we had, into a couple of stocks, Glaxo, this, that, and the other. But I mean, the fact that you could make much more than you could make, at work, in a sense, tempts you to say, can you do this on your own, and so on and so forth, and hence, the move to Prime, etc. But I think the real takeaway from this is that you have to make money where the crowds aren't there. So the important issue here is not so much, so sometimes you can call it the arrogance of youth, you can call it the arrogance of intelligence or whatever limited you think you have, that you want to go out and, that's where, so my fetish, if you will, is for small and unknown unheard of stocks and that which you have to do a little more work on. And I think that's what set me on the path to trying to discover some of these.
What will Trump do to the markets? Is he going to create a trade war and therefore spoil the good game that's going around in equities all over the world? Or are the next 2, 3, 5 years going to be good years for growth and for equities?
So, Lata, I think sequencing is important with respect to the US President's policies, and there is not enough clarity right now for me to actually make that call. At one end, he is likely to offer tax cuts to corporate America. At the other end, he's going to probably levy a border adjustment tax, though I felt in his last speech he has diluted the impact of that or his intentions. So depending on the sequence, it will determine how the market behaves, say, in 6-month time frame. But I don't think the market will care that much, because right now we are in a global reflation trade. Global growth is heading higher, global inflation expectations are heading higher, rates are heading higher. This is a good environment for equities. So you can see that rub off into India. 80% of what's happening in India since December is global. It's not local. And you can see the correlations are high, and global economy is actually surprising on the upside.
All right, that was